Okay. Hello. So, this is the most recent trade I've took, and I started a new backtesting session. The previous session was average. It had 22 trades in it, and like somewhere between 30 to 40% accuracy. And because the risk to reward ratio was like 1:2, so I was like still profitable, but small profit. And out of those 22, the first 12 were bad and the last 10 were really good. I improved upon some mistakes I made on the 12, and yeah, so the results were not bad. I wanted to start fresh, so I was like, okay, let's start a new session. And I made mistake on the first trade I took. I mean, I did improve upon the mistake I was making the most, so that's a good thing. But I neglected some basic rules, and I will tell you what they were. So I will start from the higher time frame. This trade was taken on Thursday. So price came here in this 1 week volume imbalance, and from there this is Monday. Okay, Monday took previous week's low and was bullish. Then Tuesday I got a good trade on Tuesday, but that was in the previous session and it was like a really good trade. But yeah, not gonna talk about that now. And Tuesday swept Monday's low and rejected. So I had bullish bias for Wednesday and the bias was given, but it was too abrupt and too big of a displacement on the CPI 830 red folder. So I couldn't get any trade. And the bad trade I took was on Thursday. And now, as you guys can see, price is in a market maker sell model, which is bearish. And price came up on Wednesday, and it was in a rock and a hard place, as Omar says in the mentorship. Because as you guys can see, this is a 3 bar swing from the 1 week volume imbalance, and it basically shows bullish prices. But we are also in a market maker sell model, and here is the 1 day mitigation block. And I mean, this is also like a rejection block kind of, but like yeah, I marked it as a mitigation block. And this 1 day fair value gap. So the direction was weird, obviously, and plus this was like a very big displacement. And from what I've noticed, after a big displacement day, the next day usually does not have a big range. So let's go on the 4 hour, and on the 4 hour you can see price is clearly consolidating, right? And even in my notes I wrote that I am unsure about the direction and that it is between a rock and a hard place, but I still took in the trade. Even though I was unsure, I was leaning more towards the buy side because of the 3 bar swing. And on the 4 hour you can see it is a shift in market structure, but it was also a retracement, but it was still a shift in market structure and a 3 bar swing. So I was leaning more towards the bullish side. But if we go on the 1 hour, it's like consolidating it to previous day's high. It came low, and I have another section in my notes which is New York session bias. And even in that I wrote that I was unsure what New York was gonna do, because initially I was leaning more towards bullish signals. But given this Like, this is a 1 day imbalance, and the mitigation block, it could well be a institutional order flow internal, which is basically a rejection from a fair value gap. So like, it didn't make sense for both the directions, but I was still leaning towards a bit about bullish. I tried to look for bullish stage, but I clearly didn't get one. Here it is, market went down, price went down, it went up, and then started going down again. And because I was looking for bullish stage, I didn't get one. But like, if you can see it here now, oh no, sorry, it's a bearish stage. So like, yeah, there was no bullish stage offered, and so I did not take a trade. But after New York session, there is a London close kill zone, and I took a bearish DXY trade, and I convinced myself that by this 3 bar swing, as you guys can see, high, low, plus big displacement, red candle. But this 4 hour big displacement red candle is an inside candle. Like, you can see, this is between the range of the previous candle, which basically indicates consolidation, and you should avoid trading in consolidations. Here you can see on the 1 hour the consolidation is much clearer. But the what I thought was, it is price has gone down and it has gone up, and this is like an accumulation manipulation kind of thing, and now I expect a distribution. On the 15 minute, you can see I was given a market structure shift. These fair value gaps were invalidated, this down close candle was invalidated, and the 830 orange folder also respected bearish order flow. And so I got into a trade here, this small, not small, but this fair value gap on 15 minute. And this was essentially the mistake I was making, and I was losing a lot of good trades. So I was more stuck on improving upon that mistake. So I took in the trade, and it obviously gave me a loss. So yeah, with improving upon old mistakes, I must also pay attention on the basics as well and not forget them. I will make sure to do that.